All right, we are just over 3 minutes away from getting this thing going. Rich Wheel in the Twitch chat. What's going on? Congratulations on being the first person to send a message in the chat today. We are going to get things going soon enough here. All right, 2.5 minutes to go. We've got Rain and Thunder, Sleepy Condor, George Park. Is the giveaway still applicable if you are outside the United States? That one, TBD. If you win and you are outside the United States, I may have to see how much shipping costs, but we could definitely work with you on that one and see what we can get. So while we've got 2 minutes until we get the stream started, let me get this. I think, did I save it from last time? I did not save it from last time. I deleted the tab. But let's get another HT giveaway tab going here. Give away. Let's make it look a little bit nicer than last time. Maybe blow the text up a little bit. Any fonts that we like here? What are we looking at? I don't know about impact. I don't know how I'm feeling about that one. No, don't like that one either. We've got, let's see. Yeah, timer's still going here. 1:30 till we get the stream started, so we've got a little bit of time here to mess with the font. Let's see what we got. Maybe very, nah, I don't like that one either. I gotta be honest, not a huge fan of the ones that Google's given me here. You may just roll with impact. Make it a little bit bigger. Number, name, Calibri. Okay, ODX wants Calibri font. We're putting it in there. We've got Sleepy Condor telling me to merge cells, and if there's anything I've learned from the world of M&A and building models, it is that I will not be merging cells at any point. I hate when cells are merged. We've got 40 seconds until we get this thing going. Off screen, I actually need to update the YouTube thumbnail, so bear with me. And then I will circle back to everyone who has typed HT into the chat and get you guys entered into there. And I will say, if you do win the giveaway, it is up to you guys to reach out to me because I don't have the ability to DM anyone through like Twitch or YouTube. So if you're watching at the end of the stream, you win the giveaway, you've entered, reach out to me, literally any single platform, Twitter, YouTube, our Discord server, and we will get you set up with your prize. We've got 5 seconds until we get things underway. And here we go. I still have not quite updated the YouTube thumbnail on this, so bear with me for about, hold on, we're going to put 30 more seconds on this thing. We're going to call it 30 more seconds here. All right, bear with me, bear with me, bear with me. And then I will circle back to the chat, get everyone updated onto this, and then we are going to jump in to our analysis for the upcoming week. And we are coming off a really, really nice week that I'm super excited to talk about. I mean, a few weeks ago, it seems like beginning of December, we were talking about, how upsetting it was that we had a dip at the beginning of December, how we needed to be patient, and eventually we would recover our money and things were going to be okay. And, if we go to our year-to-date summary here, there we go, stream's getting started. But if we go to that year-to-date summary tab, we've already recovered this dip that we had, right? This is one of our worst weeks of the year, and we lost 11.7K, which objectively, not very good. But the 3 weeks following, we've made back $17,000, and we're profitable by about $5,500 in December. Let's talk about how we did it. Welcome back to the weekly HT stream, where we are going to talk about, what we've done in the stock market last week, what we're going to be doing this upcoming week through the context of being an option seller. And as you can see at the bottom of the screen, we've got type HT in the chat to enter the HT giveaway. We are going to be giving away a special prize at the end of the stream. And if you would like to be entered into that, just type HT into the chat, and we are going to get you set up with that. And bear with me here for a second. Here's the chat live right now. We are going to enter some of these names in, and I can't have both windows active at once, so I'm going to have the chat off screen for a second. And I'm putting names in right now. If you do not see your name on here and you've tried to enter, just let me know. But we've got number one. Top of the list is going to be our good friend Sleepy Condor. Sleepy Condor. Then we've got George Park 63. We've got Rich _ Wheel. Scrolling through the chat to make sure I get everyone here. We've got a series of numbers. This is going to be fun to type out. 85792811574. I don't think we're going to confuse that with any other names on here tonight. We've got Cliffo. Let's see. Moving down the stream here. We've got KB from the YouTube chat. What's going on, KB? We've got Never Ender. And shout out to the people from the Discord server who are in here on the stream with us tonight and riding with us every single week. We've got Honest Ave 95. We've got HYAR 152. And I think that is all we've got. So here's the list so far. If you do not see your name on here, it is because I 100% missed you in the chat. And just type HT into the chat and we'll get you entered onto this. And we currently have, as it stands, wait for it. We have 9 entries, and that I'm sure that's going to grow as we move throughout the stream. But this is the official list. But let's get into why you guys are here. And let's talk about the upcoming week in the stock market. And first, what we do every single week. And I just realized my little banner at the bottom is covering up the chat. So we're going to move the banner. There we go. Some quick technical fixes right there as Carter Dobbleman enters into the fray for the HT giveaway as entry number 10. Carter D. We've got ODX 014. Oops, I can't spell tonight. 014. Okay, let's get into it. Thank you for joining us. Last week, awesome week for us, right? The S&P 500 had a really good week in the market. The risk with our strategy, right, since we give ourselves these cushions when we trade, is that, it helps us a lot on the downside, but quote unquote, the risk that we carry along with our strategy is the risk that if the market has a super good week like it had this past week when it went up 2.33%, the risk is that we underperform. And while technically we did underperform by 0.06%, I am thrilled with how last week turned out, as after commissions, we took home a net profit of $4,005. And, 2 great things about that is, 1, objectively, it's always great to make money. And 2, since that risk that we described is that we underperform when the market is going really hot, we kept in line relatively with that while not using a lot of our buying power, right? Our fully cash secured amount was well below 100% the entire week, which means we weren't carrying a ton of risk. And that's something that we love to see on a week-to-week basis, because it makes the weeks, a lot less stressful for us. If we scroll up here, we'll see 117, we'll see 163. We got into hot water when we had 187% fully cash secured, and that's that big red week that we had. But, learning from the mistakes, obviously trying to get better every single week when we trade. We're taking the foot off the gas a little bit because the market is running super hot, so we want to be careful with that. But that's the idea going forward. We want to hold some fewer positions, right, just in case the market decides to pull back. The quote-unquote Santa rally that a lot of people like to talk about, quite frankly, did start happening last week and, towards the back end of the year. We had big, and I think the bottom up really quickly. This is December 20th, and between December 20th and when the market closed on the 23rd, we went from 450 to 471 in the S&P 500 ETF SPY, which is a massive move in a short amount. And we've got the 180-day chart right here. And quite honestly, we haven't really seen this sharper recovery. I mean, we saw it at the beginning of December really quickly, but before December, in the context of the back half of 2021, we really haven't seen a big jump like this. So the recovery that we had right there was super quick. you'll notice that volume was a little bit lower on the recovery as opposed to the decline. So, some people get worried about potentially having a low volume rise at the end of the year, which will then get sold off in January. Like if we take a look at the 1 year chart, right? January of this year, you can see the back end of December 2020 right here. It ran up, and then towards the end of January, beginning of February, there was a decent pullback in the market, decent pullback in February and March. And I don't have the chart in front of me, but there is a document that gets circulated every now and then that shows returns in the S&P 500 by season. So seasonal returns in the S&P 500. The end of the year tends to perform pretty well, while the beginning of the year tends to have a little bit of chop, lower returns as compared to the end of the year. But having all of that in mind, with how big this run has been lately, how much we're up overall since the COVID dip, like what we can see in the 3-year chart from the bottom of the COVID dip back in March of 2020, we just want to be cautious with our money, and that's going to be our approach going forward. So keep that in the back of your mind as we go through everything that we're going to talk about during the stream. So to avoid just completely, getting into small talk, I guess, here about what's going on in the market and kind of getting into the nitty gritty, talking about what happened last week when we took home over $4,000, let's take it from the top here. BRPM, this position's been a little bit dormant, but as we talked about in our analysis of the stock, if we type in BRPM, we can blow up the chart of it right here and you get an idea of what we're looking at. The 180-day chart is going to do a little bit better. But, the idea was always that, we entered around 1080-ish, which obviously is above where it is right now. So we're sitting on a little bit of a loss, but we see the precedent for this thing running up to 1574. There are not a lot of shares trading in the market right now. So, I always hate to have the quote-unquote squeeze as a thesis for our investment. But that's kind of what this is, because we're protected on the downside by this $10 price floor, since this is a pre-merger SPAC, special purpose acquisition company. And with it trading at about 10-12 right now, the downside's to 10. There's no harm in holding on to this thing for a few more weeks, just in case there's a little bit of a pop, and then we could either take profits or get out of the position for near break even. So no harm really on this one. If you're not in on this one already, obviously really solid entry point, because it's about as low as it has been and about as low as it can be going forward between now and the merger. You just want to keep an eye on the news if you are in on this position, to make sure that you're not holding these shares for the merger, because that is when that $10 price floor disappears, and that's when you could potentially sustain significantly more losses below that $10 price point. Palantir, one that we've been rolling with on a week to week basis, in aggregate, the shares went down, but why we do what we do is because we could still make money on these bullish positions even if the shares go down. So the shares went from 1906 to 1893. That's a $130 loss on our shares. But the premium we collected from the 20 strike call that we sold and the 20 strike put that we sold as a part of our straddle that expired on December the 23rd, last Thursday, we took home $320 through the premium. So in aggregate, Palantir made $190. So if you consider that one position where we make $190 in aggregate, we pretty much had a perfect week where we didn't lose money on a single ticker that we played, and we're definitely going to be trying to keep that up going forward in the near future. We came somewhat close last week. We tripped up a little bit on some of these shares, but really successful week last week. And here's where we are with Palantir. We talk so often about some of these trades that we're in and we're out of, like Wish, BlackBerry, Boeing, Rite Aid, all these trades that we get in and out on. We made a quick, almost $1,000 on some of these things, and we put them into our portfolio. We take them out. We never see them again. Every now and then we're going to have a loser. It's just important that we know how to manage the loser, and this is what that process looks like. If you're new to our stream, this is probably going to look a little bit crazy to you because it involves rolling and rolling and rolling from when we started this position on November 9th to where we are, today on December the 26th. But we've continued to chip away. You'll see these little bits of profit off our initial. We had a pretty big initial loss on this one of 48.20, which is just what happens, right? Because we started playing this at 24.80. It dropped 23.67% as it stands today at a current price of 18.93 that it closed at last Thursday. And that's a pretty big loss. It's going to take a little bit of time to make that back. We're not all going to make it back in 1 week. But the idea is we just keep chipping away bit by bit by bit. And you'll look over here to see our break-even price tracker. And I could might help a little bit on the stream to make this a little bit bigger. But you see, we started at 24.80 back on November the 9th. And we're chipping away at this bit by bit by bit by bit. And we're now down to the point where our break-even price is 22.23. So we're not going to be able to break even if it goes up to 22.23 this week because we have our profit capped at 20. But the idea is that if Palantir rebounds, gets back up to that 20 level, then we could roll our strikes up $1 to 21. That'll have a direct decrease of $1 on this, and all of a sudden, we'll probably be sitting with the 21 break-even price by the end of the year if this thing recovers to 20 next week. And that is perfectly manageable, all things considered, with where this thing started off and where it's currently sitting at. So we're super happy with that. Before we get further down the list and talk a little bit more about how we came home with about $4,000 of profit last week, let's update our giveaway table. We have some more entries here. We've got Mr. B in the YouTube chat, Mr. B, and we've got Steven in the YouTube chat as well as entries number 12 and 13. Welcome to the stream and welcome to the giveaway. Best of luck. So moving further down the list, Draftkings is really probably the only other one that we're going to talk about in depth here because it's another one similar to Palantir where we had the stock drop 23.67% on us. Draftkings has also dropped about 18.22% on us in an even shorter time frame, right? We started Palantir at the beginning of November. We started Draftkings at the back end of November, November 26th, when the stock was at $36 a share. Now, we identified that that was a really solid area of premium to sell, so we were able to sell decently far out of the money off the bat, so our initial break-even price was $32.62. But as DraftKings continued to drop and drop and drop, we've again been chipping away at that break-even price. There's $240 of profit, $1,000, $340, and a potential $740 of profit this week. It's one of these things where would we love to keep rolling this strike up at 32 or 33 so we could get back to the max profit that we originally had? Absolutely. But, you're not going to win every single trade. You have to change that mindset from one of I'm aggressively attacking max profit to one of, okay, this thing's dropped 18.22% on me. I need to just try to get back to break even. And that is really close to where we've gotten so far. And the fact that we could take a look at the DraftKings chart since the back end of November, which is going to be right around here is about when we entered into that trade. We could look at this, say we have had a bullish position on this stock since this level, and we're about to break even. That is pretty significant, and that really speaks to the value of the strategy that we're running. The fact it could drop so much in such a short period of time, and the fact that we could be right around break-even price, and that's the value of identifying good premium selling opportunities. We've got a question from Steven in the YouTube chat right here. I'll drag this on, saying, do we have our Excel sheets with cost calculation available for download? So we absolutely do have our spreadsheet available for download. The link to this is going to be in our Discord server, which the link to that, the Discord server, should be in the descriptions of our YouTube videos. You could find it on the homepage of our website, hourglass-trader.com. And then from there, you basically go up to File. You go down to Make a Copy. You could go to Download. Just a lot of different ways to download this and really get exactly what we're using to calculate all this ourselves. But as far as the break-even tracker is concerned, we could use Fubo as an example. This thing doesn't calculate automatically. Now, we know that our break-even price off the bat is going to be the strike minus the premium we get, like 17.31. Or 17 minus 0.31 is 16.69. But from there, since this is kind of a dynamic spreadsheet, the way this all calculates, I honestly just kind of use guess and check to calculate break-even prices. So we see that we have the formulas in here. If you didn't know what your break-even price would be after you rolled down on December 17th to the 15 strike puts, you could type in, okay, maybe at 15.5 I'd be breaking even. And then you'd see, no, I'm still losing money at 15.5. And then we would eventually get to the point where we get up to 15.66, even though I used a comma right there because my keyboard is not currently lit up and I can't see what I'm typing. But that's when you say, okay, I typed in 15.66. That gives me $0 of profit. That's my break-even price. But that is how that works. And that's kind of how we back in to that calculation. And let's see. That is what happened on DraftKings. Long story short on DraftKings, one thing that I do want to make, or one point I do want to make, is that during the week, we rolled down from 32 strike to 29 strike. And we did that, I think, on Tuesday or Wednesday. Don't remember the exact day. But the situation that we were in was that the 32 strike was so far in the money with the stock trading around $29 and change, we actually didn't have a ton of extrinsic value on there. And the issue, obviously, if we don't have a lot of extrinsic value on the puts that we're currently selling, those 32 puts at the time, we're not getting a lot of value from option selling. So we rolled one down that was pretty much at the money the 29 strike put, and I think we did this when the stock was at 30 a share. So we had a decent cushion there that allowed us to, one, lock in the profit that we had on leg 5 right here of $1,000 and $1,060, and two, put us in a position where we had an even bigger cushion in case the stock pulled back a little bit by the end of the day, or the end of the week rather. And that got us into a decent position. On the roll, we collected a 20-cent credit from an extrinsic value perspective, and then we rolled forward to next week to collect 74 more cents. And since we rolled not only for a credit on the extrinsic value on week to week, but rolled the strike down, that significantly impacts our break-even price and lowers it even faster. So again, while we can't get to 29.73 because our profit's capped at 29 here, we're getting really, really close. If Draftkings finishes above 29 this week, which it's at 29.44, we like to sell out of the money so that we have a little bit of cushion. But if Draftkings finishes above 29, you can see the calculation right here. We'll have only lost $730 on this trade after having an initial loss of almost $5,000 the first week we've done that. And that was something that happened when we started off the trade at 36. Draftkings isn't even up back past 30, and we're looking at a possibility of breaking even pretty soon here. So that's the value of doing what we do. I think we've done a very good job managing this trade, adding a little bit, taking off the table a little bit when we can, and kind of playing both sides of it. And that's how we've managed to whittle our break-even price down to 29.73. The fact that we've got this below 30 by year end on something we opened when the stock was at 36 just before December, I think is fantastic. And if Draftkings does drop again, that's okay. We'll just keep continuing the process. I wish I could put that Joel Embiid gif of trusting the process up on the screen right now because we love to reference that one in the Discord server, but just continue to stick with that one week after week after week. Updating the HT giveaway spreadsheet, we now have Henry. There's some nice spelling again from myself. Henry needs money in the Twitch chat. And then we've got Rakesh in the YouTube chat entering at number 14 and number 15. Welcome to the stream and welcome to the giveaway. But, high level end of this that we have right here, BKKT, Fubo went really well. Actually, let's look at Fubo tab really quickly because this is one where we started it at 18. Last Friday it ended at 17.7, which is significantly above the 16 strike that we sold. But, in aggregate, we started this trade on December the 10th with Fubo at 18. It ended last Thursday with Fubo at 17.7. So Fubo dropped 1.67%. And we still took home a profit of $340 in just under 2 weeks, which is good for a 2.12% return in under 2 weeks, which is 80% annualized. And we get that really nice annualized return number despite the fact that the stock dropped. And since we sold these 16 strike puts, it did finish at 17.7, but this thing could have gone all the way down to 16. And we would have been in that same situation that we were in where it could have dropped over 10% and we still would have made the same return. So that's the value in what we're doing. That's the idea behind these trades that we're making when we're rolling on a week-to-week basis. When we're adding positions because the stock has dropped a bunch. Even if we have to roll for a debit and make up for it like we did right here with selling some additional puts. That's the idea behind what we're doing, and we're going to keep following that process because it's leading us to profits on individual trades, week after week and trade after trade. And we say every week, if you never lose, you're going to win. And we're trying our best to keep sticking with the process and just not lose. And, Robinhood, 17 strike put, that one went well. BKKT identified some really, really nice premium here. This one got a little bit dicey, I think, on Friday or Thursday morning, rather, when it got below $9 a share, but finished at about 10, so this one comfortably would have gone to max profit, but I closed out half of it for 15 cents just to be on the safe side of things, so don't regret that at all. Took home $130 of profit. But these things like Robinhood, BKKT, BlackBerry was an earnings trade we talked about on the stream last week. Wish was one we picked up. Boeing was one we identified on the stream last week. Rite Aid was a potential earnings trade. I mean, even these down here, the idea is we're diversifying our portfolio, collecting a bunch of base hits, and even just these quick ones that we talk about right here, that's $1,240 of profit right there. And those were some really, really quick analyses that we had at the end of last week. And I think if I open up our Discord server really quickly and pop back into the notes that I had made for us for last week's stream under trade plans right here, this is how those ideas turned out, right? We had all of these outlined. Every single trade idea that we had here from the stream last week that we put in front, analyzed, decided was a good idea. All of these hit max profit. So really happy with how that went. We're going to try to come up with a similar list for this week and try to find ourselves in a position where, I don't know if we're going to be pulling $4,000 or $5,000 because I do want to take the foot off the gas a little bit as far as buying power is concerned after how much the market went up last week. But I do think we could put ourselves in a position where we have several different stocks and options going in our account. So we have diversity from there, try to collect a few $100s here and there, and have that aggregate into a really, really nice number for us. So let's, update this to say week of 12/26, and then get into what we are looking at for the upcoming week and try to come up with a list like we did last week, where we have a really nice catalog of potential plays that we could jump into tomorrow morning when the market opens. Before we get into that, we're going to do two things really quick. The first thing is we're going to welcome Silpa, Cash Money, and Mahir onto the stream and into our HT giveaway. So we've got Silpa. I'm just going to put SK. That's nice and easy. We've got Cash right there. And then we've got Mahir in the YouTube chat as entries 16, 17, and 18. Welcome to the giveaway and welcome to the stream, guys. How you doing? But before we jump into what we're looking at for the upcoming week, which we have a preliminary view of it right here, quick self-plug for hourglass-trader.com and our HT premium package, right? It's always going to be free to join the streams that we're putting on every single week. It is always going to be free to learn the strategies that we outline here, right? We've got HT, we've got credit spreads, these things on our website with write-ups. These are always going to be free because above all else, our goal here is financial literacy and helping people learn the strategies that we're putting into play. However, if you want to take your trading to the next level, if you're looking at our HT profit tracker and saying, okay, these trades are great, how do I get in on the same thing? The answer is you could get alerted to every single trade that we make, as seen right here in this channel where we have every single entry, every single exit as we make them with tagged alerts for our HT premium members. And you could get those for yourself by joining HT Premium. Go to the homepage, hourglass-trader.com. You're going to click the button right there to join HT Premium. We have two packages. We have the monthly and the annual. They offer the exact same thing. Monthly is going to be $25 a month, and there's zero financial commitment to start off with a 7-day free trial. If you sign up and decide it's not for you and cancel, we're not going to hate you. No worries. It's not for everyone. Everyone's financial situation is different, but I do think if you're watching, you are doing yourself a little bit of a disservice by at least not giving it a shot, right? And outside of just these trade alerts, we've got several different premium channels. We have a premium chat that's really, really active on a daily basis in the market. We write up some trade plans sometimes. We have a watch list, which right now is not updated, but I actually have the next week off of work, and I'm super excited because I'm going to be able to put together a lot more content, update the website, and get all of these HT premium offerings more and more up to date. We've got Cliffo, a member of our $250,000 profit club down here, saying it pays for itself. And if Cliffo thinks it's great, I wouldn't be one to disagree with him. But again, we've got links to our option scanners that we use to come up with our trade ideas, and a lot more, right? We've got that live portfolio tracker, our watch list, scanners, trade alerts, and some of the trade plans along with that premium chat room. But again, biggest things probably the chat room that you get and the trade alerts that we get. Can't emphasize that enough. But we'll be updating a lot of these for the upcoming week. But if you're interested in signing up for that, hourglass-trader.com for HT Premium. So now that I am done with the quick self-promo, let's get into what we're doing for the upcoming week and how you're going to make that money to pay for HT Premium. And before we do that, I'm going to take a quick sip of my water because I think I've been talking for about half an hour straight in the corner of my bedroom. And, my throat's a little dry. All right. And as always, that was a fantastic sip of water. But again, top to bottom here, this is what we have in play for the upcoming week. And we talk about this every single week where, Sunday night, the list of what we have is never that long. But throughout the week, there's a lot that happens on a day-to-day basis, which again is kind of the value of what we're calling out. The value of being in a community, having a chat that you could bounce ideas off of, and the value of getting these trade alerts on a day-to-day basis. But as Monday, Tuesday, and Wednesday progress, there are going to be a lot of new trades that we enter into. So the idea is going to be figuring out how do we get ourselves from this right here to a long list of nice, profitable, and high percentage trades. So, obviously the first suggestion that we're normally going to have is if you're not in any of these, that's typically where I would begin the process of figuring out, what I want to enter into. And forgive me while I open up a new window to start taking these notes so I can post them in the Discord after the stream. But you can see we've got some safer trades, some premium chasing plays. And these are all going to be under the HT wheel category of trades. So as far as safer trades are concerned, we've got Palantir here on a week-to-week basis, just because we still like the stock with where it's currently trading at. I think that 18 level of support has proved to be a really, really nice level of support. We've got that plotted out on the 180-day chart with, an absurd number of other red lines where we try to identify areas of support and resistance on this one. But 18 has been proving to be a really, really nice level. So we've seen some resistance at the 19 level, which is interesting because looking back, there hasn't really been precedent for that being an area of either support or resistance. I thought once we broke up off of 18, we would hit 20, but also maybe one of those things where it takes a couple weeks for it to get there. So I do think next stop is 20, and that's why I am in favor of playing this one on a week-to-week basis. We know that we like to look for a 1% ROR, which is a 1% return on risk. You don't see it at that 18 level, but when you go up to 18.5, we see a 1.43% ROR, which is above that threshold, meaning that's a very acceptable return on a week-to-week basis. And while 18.5 isn't the support level, 18.5 is the max profit level, you do also want to consider where your break-even falls, right? 18.5, the strike, minus 26 cents of premium, gets you an 18.24 basis, which is, something I would consider close enough to that 18 level of support. The market maker moves telling you there's only going to be plus or minus 22 cents of a move right here, and that is far beyond the implied, or far under the implied move right here, which suggests there's a pretty significant advantage here for option sellers. So I don't think it's a bad idea to get too aggressive with this 18.5 and go for that 1.43. So on the little list I'm making, I'm gonna put PLTR, and I might as well pull the list onto the browser that I'm working with out here so you guys aren't just completely staring at a blank screen as I go through and I update this. So there we go. Let me zoom in on this a little bit because that is my to-do list down there. Zoom back out one. There we go. So the first thing on the list is going to be Palantir. Remember, we're always going to want to sell weeklies if available before we sell monthlies. So the 18.5 strike puts, those are looking pretty solid. Let's go back to the profit tracker, see what else we got on here. And of course, this also zoomed in on this, but maybe not the worst thing in the world because I don't think there's anything else we really need to see here right now. But next thing on the list is going to be Draftkings. We sold the 29 strike puts just in the context of the trade that we've been running along and along and along and along, because I think that gave us the best opportunity to move back towards break even. But, if you're not in on this, what would be a good idea to jump in on? We take a look at Draftkings. We could see, chart first. We saw that there was this little level around 30 where, it had a pretty big red candle to break down below. Wasn't a lot of support there on the way back down, but we did see a little bit of resistance at that level last week. But, where's the next level of support? And if we draw the line right here, it looks like that 28-ish level, may be what we're looking at right now. So if we, draw an erroneous line really quickly, remove it, and then zoom in, we'll see how we had a pretty big bounce between December 3rd and December 4th off that 28 level. While it did break below 28 on December 16th and December 17th, it reclaimed that level and acted as support again before it made a run up to 30. So I like the idea of a $28 support level on Draftkings. So if we pop over to the trade tab, take a look at that 28 level. There you go. You'll see that there's a 1.69% ROR. And, beyond that 28 level being max profit, which is also coinciding with the support level, your break-even price is going to be that 28 strike minus roughly 50-ish cents of premium to put you at a 27.50 break-even price. Boom, that falls just below that area of support. So I like the idea of the 28 strike puts. And if you do want to stick to that 1% ROR and give yourself an even bigger cushion, the 27 strike puts for the upcoming week are still pretty much in that neighborhood of a 1% ROR. And one great thing about Draftkings is, we talk about margin a good amount because margin is another area that option sellers can use to give themselves an advantage in the market. Normally, it would take $2,700 to sell fully cash secured. With margin, it only takes you about $338. There's a significant reduction in buying power on Draftkings to turn your ROR into a really nice ROC, return on capital or return on collateral. So big fan of Draftkings, and that's why we've got that one loaded up in the account. But if you weren't in that and we had to recommend one to jump into, this is one I again would term a safer play. I would put the DraftKing 1231, the 28 strike puts right there. And just like that, we are getting the list going for the upcoming week. Now, going back to the trades that we have for the upcoming week, Fubo and Robinhood are up there. Those are no longer safer trades. These are what I would consider premium chasing. And that doesn't mean that they're not good trades, right? It just means that the stock's a little bit more volatile. So with that in mind, what you should be thinking heading into that trade is, one, don't freak out if the stock drops 10% in a day, because the stock could jump back up 10% in a day. And, that's not to say these are moving 10% per day. But, if you look at Fubo, for example, this one is definitely been. If you got in when it was trading at 19 and freaked out when it dropped down to, 15, you would have taken yourself out of a trade that quickly rebounded to 18. That's the kind of volatility we're talking about. So you want to be cognizant of that and don't let a bigger dip scare you out of your position, because we've identified some decent support levels at about 1650 and 1670-ish, right around this neighborhood. So we're happy with selling puts around that level. So for the upcoming week, we sold puts at the 16 level just to be a little bit more on the conservative side of things. That 16 level, if we go to the 20-day chart, I guess, falls right around here. It did dip below that briefly at one point last week, but with it currently sitting just below $18 a share, I think that 16 level is going to be one that's relatively safe for the next 5 trading days. And again, $1.70 implied move would put the low end of the range right at 16 on the number. So that's one that we're happy with. And if you look at that 16 strike, you'd see that it's offering between 16 and 17 cents of premium. That is going to give you a 1.04% ROR on the week. So that is just the number that we like to target. Fubo is also a nice one, where if you go click on, one contract right here to see the margin effect, it normally would take $1,600 of collateral. It pretty much cuts it in half, right? It would only take $700 for you on this one. So that would double the ROR to, 2.08% RO. So you're kind of splitting hairs with that. But again, really respectable numbers on a weekly basis, while still providing you that really nice cushion that we like to have as we enter into all of our trades as option sellers. So Fubo, if we go back to the HT notes doc right here, premium chasing, which again, not a bad thing, but just one of those things where you need to be aware how the stock typically behaves so you don't get spooked out of a position. But the Fubo 12, 31, 16 strike puts are solid as well. And that brings us to the last weekly position that we have for the upcoming week. That is going to be Robinhood 17 strike puts. If we take a look at Robinhood, we were a little bit wary on this one. This is one where if you back up to the 180-day chart and take a look, it's just been in a really, really slow decline ever since, September, which is crazy to think about. It's just been generally bleeding out. No huge red candles with the exception of earnings that they had. And I don't know when their last earnings were. It looks like October 26th. So we may be a month out from more earnings. One good way to figure this out is to type in hood right here. Doesn't look like they have any upcoming events, because that would be denoted by one of these little blue or red icons right there. So no earnings events or anything like that to worry about. We didn't know initially where it was going to bottom out, because, this thing just IPO'd in July of this year. There isn't really any established support once it broke below that IPO price. So we were kind of guessing, but at the same time, we were using our favorite study, which is the RSI study, to make an educated guess as to when it was going to start bouncing. And when we saw this blue on the RSI, after it already broken below 20 a share, we saw, okay, this might be an area where we could expect to see a little bit of a bounce. Zoom that chart in, and that's exactly what we got at that 18 level, which is where we originally were selling puts at. So we see a bounce at the 18 level. We go to the option chain. We know that 18 could short-term be support. Even at 18, right, you can see that there's a 2.07% ROR, which is objectively a pretty nice number. 2% ROR. That's double what we typically try to go for. But if you want to get a little bit safer, go below this 18 strike level to 17 to really, really get you a nice cushion, right? And your max profit point with the 17 strike puts would be below the lowest that this stock has ever traded at, and would give you a 10% plus cushion for the upcoming week. So that's what we did. We sacrificed a little bit in the ROR, dropped down to a 0.86% ROR in a week, as opposed to getting a little bit more aggressive here for the 2.07. But, that's kind of the game we play, right? Do you want a bigger cushion, or do you want a little bit bigger of a return while, still having a cushion with an 18 strike put, quite frankly? And I don't think there's anything wrong with selling 18 as opposed to 17, But with everything that we talked about at the top of the stream, being a little bit wary of the market having run so hot, anticipating a little bit of a cool off in the market in the upcoming weeks, I want to err on the side of giving myself a bigger cushion just in case this one turns against me and I'll be able to effectively run the HT wheel to average down on it. So that's why we went with 17. And I think if we had to make a recommendation, which, we are not investment advisors, so none of these are official. We're just talking through our own process and hoping to teach you guys through that as well. But these 17 strike puts are what we went with for just south of a 1% ROR. But, we're perfectly happy with that. So we're going to throw the next trade on here as HOOD 1231, and that's going to be those 17 strike puts for a little bit of added safety. And that's kind of on a weekly basis the extent of what we have for the upcoming week in the market. And one little exercise that I like to do so often to analyze, how good of a position are we in for the upcoming week in the market is just to see, hey, if stocks stayed dead flat, how much money would we make, right? Because stocks can move in our favor. They could go up. But stocks could also move against us and go down. But I think the most likely place for a stock to be 5 days from now is exactly where it currently is. So if Palantir stayed dead at 1893, that would expire worthless for $120. This would drop down to 107. That would give us 140. Draftkings would expire worthless. Fubo and Robinhood would expire worthless. We could talk about RCAT in a second, but in general, these that we have for the upcoming week, which are relatively smaller positions for us, right? We're still at 43% fully cash secured of our portfolio. And, with margin, we're really only using 15% of our buying power. So we have a lot of room to add more from here. But as a starting point, we're in position to make $1,310 provided the stocks don't move at all. And again, they could go up, right? If Palantir jumps up to 20, this would expire worthless. And all of a sudden we're making $3,400. But again, in order to give ourselves a realistic view of what might happen, I think a conservative estimate of the profit that we've lined ourselves up to collect, this is the way to look at it, analyze it as if everything stays dead flat, and this is where it'll get us, right? A 0.74% return. And again, we like to get 1% or more a week, so we're going to try to see if we can scale in, add some more positions somewhere, and see what we can do for the upcoming week. So again, starting point, this is what we have going into the week. Now let's go through some of the methods that we typically like to look at to find trades for the upcoming week and see what else we can add from here as we generate our game plan for the final week in 2021. So the first place that we typically like to start is, going right to the scanner, the HT high ROR without earnings scan. And again, if you're an HT premium member, you can hop on our website, hourglass-trader.com, and you'll get the link to bring this right into your thinkorswim module, and you could go over to personal and pull this thing in with the click of a button and run the scan. So there you go. You hit the big green scan button, let all numbers load, and here, what's going on right here? What have I done wrong in my scan? Let's see if I could figure it out. Days to expiry. This is looking kind of strange. Percent out of the money. I want to make that bigger. Let's try to run it again. There we go. We now have 71 different options, but I feel as though we probably should have a little bit more than this. So let me switch to something else really quickly because the thinkorswim scanner has been a little bit buggy lately, to be honest. So let's try this one more time. And there you go. Now we have 645 results. This is a little bit more of what I was expecting. So for whatever reason, like I mentioned, the thinkorswim scanners have been a little bit strange for some of the results they give you. Like I've had a little bit of a bug this past week where I'll run a scan and it'll only bring me, option like stock market indexes or indices rather. And obviously that's not what we're looking for. So again, a quick fix like we just showed right there, just bring in a different scan query and then click back into the one you want, run the scan again, and you'll get that long list of results that we like to look at as a starting point. So let's minimize this and let's take a look at what we've got. And again, the big caveat with these option scans that we'd like to talk about is the fact that, objectively a 9.97% ROR in a given week is going to turn heads. But a lot of the time, just because something is on this list doesn't mean that it's a good investment idea. And further, things that are near the top of this list are on here because they're insanely volatile. And because of that, probably aren't a good investment idea. I think a lot of the better ideas are if you scroll through this list and start to look into this 1 or 2% ROR range that we like to look at. This is where the money is made, going through this level. But at the same time, every now and then there's some decent ones up near the top. For example, ARQQ. Let's take a look at what ARQQ is, because that one's offering an insane amount of premium. Quantum, okay, it looks like this thing was at insane 20-day chart right here, right? You've got this thing going from 41 to 15 up to 24 in a 20-day time span. Let's back this up a little bit further, and there you go. This thing was a former SPAC, and that is why it is going crazy. But with these former SPACs, implied volatility looks like it's kind of through the roof on this one. Let's see if we can get any premium back near. No. That was a little bit unsuspenseful, right? We know with former SPACs, there's always a risk that it gets back to this 10 level relatively quickly after the merger, and this was back in September, so not too long ago. So it's okay to play these sometimes, but we want to be making sure that we're getting premium near that 10 level, and there's really nothing at all right now. You might look at the ROR column and get a little bit misled because you see these numbers right here, but if you look, the bids are at 0, the volume's at 0. None of these are actually really being traded. That's why that number is the way it is. But you might say, HT, what's going on here? It was already at 41. Couldn't it go from 24 to 41? Quick answer is yes, but knowing what we know about SPACs, having seen the number of SPACs that we have, this kind of a setup goes poorly more often than it goes well. IRNT is a great example. This looks almost identical on the front end of this, right? It went up to 60, dropped down to 25. You might say, okay, what are the odds this thing jumps back up to 60? We see that it was a former SPAC. It was trading at $10 a share. But let's progress through time here. These red candles are seemingly inevitable with these former SPACs. And it did hang around 10 for a decent period of about a month or so before eventually dropping down to where it closed on Thursday of last week at $4.70, which is, an insane move, right? This thing went from 10 to 60, hung out at 25, maybe gave some people the false hope. But again, back to the idea we said about, wanting to sell premium around 10, because when it does get back down to that 10 level, it tends to hang out there for a little bit of time. And then, if it's going to drop, it inevitably will drop. You don't want to hang out here for too long. But that is the point about ARQQ that we want to talk about, because just because something's sitting right here and looks like, oh, it's going to make a run back up, just remember other SPACs that we've taken a look at. We've traded a lot of these for a decent amount of time, so we're pretty familiar with how the charts work. And this is a setup that you will see so commonly. So to avoid that risk and not even put it on the table, ARQQ, the first result on the scanner, not a good idea. SAVA, we know we've seen that one on a week-to-week basis because that is a biotech company that focuses on Alzheimer's drugs. And there's been some contentious articles about whether or not the data that they had was faked. I'm not making a comment on whether it was or was not. I just think from a perspective of let's avoid risk, let's take on high percentage trades, that kind of stock, that kind of situation that company is in is not a good one. Here is an interesting one, BKKT. And that we see that the 10 strike put has 6.67, and we're not going to sell that 10 strike put, but we know that if the 10 strike put has 6.67% ROR, the other puts might be looking pretty juicy as well. So if we go further down the list, we'll see that even down at an 8 strike, we could get pretty close to that 1% ROR that we target on a week-to-week basis. And if we take a look at what we did last week, we jumped in on BKKT because there was some good-looking premium, and we were able to pick up $130 of profit. That one worked out decently for us. So, on a week-to-week basis, premium doesn't move a ton unless it gets completely crushed. So a lot of the time, some of the best positions for the next week are the positions that you were in the previous week, which is evidenced by us rolling Fubo and Robinhood over to this upcoming week that we have in the market. But BKKT is offering some really interesting premium. The first thing we're going to do, right, is we're going to go to the chart. We know that this thing's probably going to hang out around this 10-ish level for a while, but another, just like ARQQ, just like IRNT, this is an identical SPAC chart with the big squeeze up front, a little bit of a rebound, and then just this brutal crushing of the price that gets people who don't know any better caught up in it and losing money because they have a basis around 30 or 40, even worse. Those people are, not going to be in the best position, but, we like to think as a group, we're a little bit smarter. We have seen this stuff before. We're going to avoid getting in up here, and potentially like with IRNT, and I know that it's trading at, $4-ish a share. So the downside potential for a former SPAC is definitely there. When this thing made it back down to 10, it stayed there from, let me click here so this goes away. This right here is October the 13th, and it didn't get back down below 10 until November the 22nd. So it had about a month and a half around that 10 level, and that's kind of something similar that we're seeing with BKKT, because when these SPACs hang out around 10 for so long, so many shares are traded at this level. A lot of people have investment bases. This is not a grammar lesson, but around this level, so you'll see a lot of chop at that $10 price level. And now it did jump up a little bit after hours to 1026, 1032-ish, but you know, maybe this spike causes a little bit of volatility that keeps the premium in these options. Point being is if we go into the 20-day chart here, you know, we'll see this continued downtrend. And I think this right here was in general caused by the pipe unlock. And we've talked a little bit about that. That's when early investors have the first opportunity to dump shares of a stock, and you'll typically see some really heavy selling pressure after that. But you know, it seemed to find a bottom around this 9-ish level. And while it did go down to 812 for a moment in time, it closed that day up near $9 a share. So I think we could, you know, comfortably call this 850-ish, 9-ish level, you know, support. And if we look at that 850, the 9 level, right, I like the premium that we're seeing from an ROR basis. Now, this isn't the greatest stock in the world. We looked at IRNT's chart and said, okay, you know, this thing could go down to 4. So I think it's really important to take position sizing into account when we start this one off. I'm not going to start this thing off with 10% of my account, but maybe, you know, allocating 5% of my account to this. And then if we need to double down, doubling down to 10. And if we need to double down further to 20, you know, we'd have 20% of our account with a really, really averaged down basis. So that might be something that's okay. However, you know, if you could get 15% or even 12-ish percent on the 8.5, or even get the 1% ROR, which would be anything better than 8 cents on an 8-strike put, I think that's something that's worth going for. So will be interesting to see where this premium opens up. But anything in the 8 to 8.5 level that offers more than 1% ROR, I think that's something that we take a little bit of a flyer on right here. And I think taking a flyer on is the exact term that I used when we entered into that one last week. But you know, putting that one definitely firmly into the premium chasing category, that's going to be BKKT 1231, and it's going to be, you know, 8P or 8.5 strike puts, you know, depending on you know, targeting greater, that's a question mark, nice job, greater than 1% ROR on that trade. So there you go. You know, we've got 5 of these right here through the typical HT wheel type strategy. So we're building out the list a little bit further. Let's go back to the scan, see what else we could see. We'll maybe try to add a couple more onto these really quickly. So, you know, UNG, I think that's a natural gas company. Let me go UNG. United Natural Gas Fund, right? Okay. So these are a little bit tricky, right? Because natural gas ETFs historically have been pretty volatile. We just basically gave the disclaimer that we don't want to be too involved in super volatile stocks like that. You know, 932 looks to be the bottom if we zoom further out. You know, not a terrible base around that level. It looks like at the 11 level, you could still get that 1.2% ROR that we like to target. There's only a 61 cent potential move, but in general, I think, you know, sticking to our rules, avoiding biotech, avoiding these, you know, crazier commodity ETFs, I think that's going to do us better. Let's stick to the rules. Let's not stray away from that. I think I'm going to stay away from this one. Novavax, that's going to be something that is, you know, biotech related. Staying away there. Mara, I'm not a huge fan of the crypto stocks right now, so that's an area that I'm staying away from until crypto pulls back a little bit further. STNE, I've quite honestly not too familiar with what this is, so let's throw STNE on the on there and see what we can see. Right, the MMM is 1.81, which would suggest that the lower end of the move is going to be, you know, 1560-ish. And you could go down to 15 and still get that 1% ROR that we like to see. In fact, you can go down to 14 and get the 1% ROR that we like to see. Stone Co. Limited. What on earth is this? This thing's gone from 95, bottomed out at 14, right? So if we look at the 180-day chart, you know, definitely some precedent for a $14 level of support. You know, the numbers add up right there. If you can get a 15-cent credit on the 14 strike puts, the numbers definitely add up. I can't imagine they'd give you too much margin. Well, they give you 10x margin on this one. That is interesting to say the least on that one potentially. But let's figure out what is going on here, right? StoneCo, several companies in the broader technology, they've been downgraded from neutral to outperform, and the price target has been adjusted to 22 from 100. And while obviously getting your price target cut from $100 to 22 is not the greatest thing in the world, one thing that we do like to look at for evidence of potential short-term actions or rebounds is where those bank price targets are. You see Credit Suisse has 22. You can see Scotiabank initiated with a price target of 22 as well. So, not the worst idea in the world to potentially get in on this. And I know it's definitely on the riskier side because this thing's gone from a peak of 71 back in June to 14. But with what's been going on here, these banks are putting in the diligence to say, okay, with all things considered, I think, we could slap a 22 target on it. That seems relatively consistent. Banco Santander has a price target of 17. Another price target of 17. Is the StoneCo bloodbath finally over? If we pull this news article up, found support at 20-ish. What has been going on here with StoneCo? If we could figure out what's been going on here. I think this is maybe one of those AI generated articles that doesn't give us too much information, but I think there's a big drop back in November from 30 to 20. Let's go look at around what date is this? November 17th to see what's on the news wire. There we go. Let's see. Record percent decrease, 32% decrease. Why were they down though? Let's see. StoneCo, can we find StoneCo? I'm not going to look too much longer. Just worse than expected Q3 earnings. So it doesn't look like, fraud or anything insane like that. I don't hate the idea of jumping in with the 14 strike put here while volatility is still high and the stock's trying to find a bottom. This 14 base was back at the beginning of December, so it's at least traded in this 14 to 18-ish window, and I think we can go to the 20-day chart to better illustrate this. Yeah, this 14 to 1850 window, and that low of 14 is just a very, very quick candle wick from December the 6th. So, we could even potentially more confidently call 15 a level of support here. But, knowing what we know, wanting to target 1% ROR, not getting too aggressive here off the bat, and maybe taking advantage of a little bit of the leverage that this one offers, I don't hate the idea of a 14 strike put here with STNE. But again, with how volatile that stock has been, this is absolutely going to be one that is going to be a premium chasing trade. So the 14 strike put. We've got Kevin Diaz in the YouTube chat. Kevin Diaz, welcome to the stream and welcome to the giveaway as entry number 19. And Rakesh believes they have a lawsuit going on with STNE. Okay, so we may need to, I think might be a good idea to put some asterisks on that one and maybe further investigate the company to make sure there's nothing crazy pending that could, knock the stock down to 10 or something by the time we wake up tomorrow. So definitely one that premium's attractive. I like the way the chart looks, but we might want to get a little bit further confirmation beyond just the bank price targets that we've seen to be confident in that 14 basis that we'd potentially be taking on that one. But again, good premium opportunity, objectively phenomenal cushion. Let's see where it takes us. So back to the scan, PHUN, very, very dangerous one right here. This is one that was tied to the DWAC. When that one jumped up, huge volatility on this one. You can get 6.19% on a weekly put right here. But the issue with this one is if you back up to the 1 year, you'll see before the huge spike, this thing was trading about $1 a share. So definitely some serious potential downside here in the near future. 285 basis off the bat is nothing if this thing runs back down to $1 a share. So that is something that I'm going to absolutely be staying away from. Back to the scan, going a little bit further down. DD is a Chinese stock. Nikola Motors, former SPAC, EV company with tons of fraud allegations. Biotech, NVAX, and he's a crypto-related stock. AMC, I've kind of been coming around on this one a little bit because, I don't think AMC has any business at all trading anywhere near where it is. But if we've looked at the trading history that's been established, since the big spike up to 70 back at the beginning of June, it's been decently steady. And I know, decently steady might be a relative term compared to how much this thing's been moving around in some of the other stocks that we've been looking at. However, when you could go decently out of the money for this 1% ROR, right? The 1% ROR at AMC is down at 24, which is a $4 move on a stock where there's an MMM of 36 cents, which is crazy value. However, number one rule that we like to follow when we're selling options in the market and specifically selling puts is never sell a put at a price that you wouldn't want to own the stock at. And for me, AMC is not something that I would want to own anywhere above 20. There was a decent opportunity that we took advantage of a couple weeks ago, I think. Let me jump back to the profit tracker to double check what I'm saying right here. However, let's see. AMC, there you go. We were able to clean up a quick $180 on 16 strike puts, which is crazy, right? Because it hasn't been within sniffing distance of 16 ever since May. So when were we able to do this? It was on one of these super big red candles. So this is one that I definitely want to keep at the top of the watch list. If there's another big red candle that gets us down in this 20 range, then I could go even further down to that 15, 16 level again and scoop up a couple percent, 1 or 2% ROR. And that's the type of trade that we're going to try to make on AMC if we jump into it. Not one where we say, hey, it's trading at 28.52. Let's just objectively pick up 1% ROR. We want to say, no, we know at some point in the future, the fundamentals, at least our investment thesis, is that at some point in the future, the fundamentals are going to catch up to this one. It's going to have another big red candle. There's definitely precedent for some enormous red candles. But when those big red candles come, implied volatility spikes further up, and that is when we want to enter. Not now, but after those red candles. And another interesting thing that I was picking up when I was researching this a little bit is what happens with some of these longer dated puts, right? I know that when we had that initial red candle, we sold the 16 strike puts for December 17th, and that worked out really well. But is there a way for us to have gotten, more than 19 cents of premium of profit? And the answer is yes. And we can take a look at the 16 strike puts for, January as opposed to the weekly ones that we sold if we pull the price chart for those up. So this is that December 17-ish range when we initially sold those 16 strike puts for December 17th. This is what the chart looks like if we had gone out another month, right? So with the drop in the price of the stock, with the surge in implied volatility, the price of these got up near $2 at the peak, right? And even, over this 2-day period, there was plenty of opportunity to get it for above $1. So maybe conservatively speaking, we could say that we would have snagged it for $1.50. Now, fast forward today where they're trading for 29 cents a piece. That's a $1.20 decrease in the option premium there, while still maintaining that same 16 strike, that same 16 max profit point. So that $1.20 decrease in the value of the monthly put far outpaces the decrease in the weekly one. And we know that the weekly one's a little bit safer, so to speak, because the time frame's a lot shorter. But in the interest of collecting more premium, generating potentially more profit if we see this kind of setup again, I think it may be a good idea to look a little bit further out than weekly and try to take advantage of these, what essentially are just spikes and subsequent pullbacks in the value of these puts. So that is going to be what we're going to be doing with AMC. We're going to wait for the next big red candle and then potentially get in on one of these types of trades where we may go near term just because that's a little bit safer and you can still get 1% ROR decently far out of the money. Or two, target maybe a month out where there's a lot more premium to decay as opposed to the weekly option. So that is our plan with AMC. And just out of curiosity, just because I want to take a look, I wonder what it would look like. And I guess I should preface this by saying in the previous weeks, right, we've had these, these UWMC and Rocket Lab positions, which when we originally sold them, they were pretty far out of the money, pretty far from expiry. I think 4, 5, 6 months from expiry. But over time, they made us a really decent amount of money on a week-to-week basis, right? Just in the random week we scrolled to, $2,000 from them, $1,100 from them. Lost, $1,200 there, but that's a wash with the previous week presented. Then you pick up $800 the week before that. You pick up $700 the week before that, and you're starting to get the picture of what we were accomplishing with these longer-term trades. And Another great thing about these is while they take up a decent amount fully cash secured, if you're someone who's using a margin account, usually if you go further out of the money and further expiry, it's not going to take as much buying power. So you could effectively control a decently sized position that's far out of the money. Like with Rocket Lab, we had 7.5 strike puts, and that thing hasn't even been below $11 a share within recent memory. So this was never really in danger of being a loser at any point. We're still able to collect a decent amount just from that on a week-to-week basis. So we've kind of been licking our chops and doing some research and waiting for a longer-term position that we could sell maybe June, July expiry decently far out of the money. And, this is an interesting example of where that could be. Now, these are going to have to be sold fully cash secured. You see the max loss is 88.70. Basically requires 88.70 of buying power to open that. So this isn't a great candidate for what we're going for right there. But, anytime we see a stock with a decent amount of implied volatility and we can get some sort of comfort around where a longer term base on that might be, that would make it a sufficient candidate for what we're trying to do with some of these longer term trades. And we don't have one on right now, but it's definitely something I've got my eyes peeled for. And one of the biggest reasons why I have not currently entered into one, and I think Fubo might be one where I want to get on, is the fact that we've seen just 3 massive green candles in the market. Volatility has been largely sucked out of the options as opposed to where we were sitting, just a week ago today when the market was down at about the 450 level on SPY. So, could be some sort of pending pullback, but, premium will definitely get better at some point as opposed to what it is right now. So for these longer term trades, I want implied volatility to be elevated. I want option premium to be elevated. So in the near term, I'm holding off on that for now. And in the near term, before we get on to our next potential trade idea, we've got 3 new entries into the HT giveaway. We've got Div from the YouTube chat. We've got Dario C's, and we've got Smile for Me too. And I'm gonna use the numbers right here just to get it dead on what the username is. So congratulations to entries 20, 21, and 22. Welcome to the stream and welcome to the HT giveaway, which will be announced at the end of the stream, which is, we've been going for about an hour. So we're coming up on the end of the stream, but, I've got plenty of time. We've got plenty of buying power. Let's build out this list that we've been working on a little bit further. And if this thing loads, let's get a few more names on here. So we've got some things we could target when the market opens tomorrow morning. So let's quickly go through the scan a little bit, and then we'll look into some potentially different trading strategies outside of just the typical HT wheel that we mainly like to target on a week-to-week basis. Excuse me. So here we go. Newegg, we know this is risky. DWAC, risky. And again, like we mentioned, just because something is near the top of this scan doesn't mean it's going to be the best trade idea. Sometimes scrolling down to this 1% to 2% range, because we already know that this is about the range that we're going to be targeting. And then quickly trying to, at a high level, find some stocks that we're familiar with. DocuSign might be an interesting one because that has really kind of tumbled off the face of the earth after the most recent earnings. Let's check back in on that one, see how that's doing. Here about as big of a gap down as you'll see for how solid of a company something like DocuSign is. But again, kind of plays into some of the strategies that we like to use, which is after these huge earnings gaps down, like that's a decent entry and decent buying opportunity while, inflating implied volatility at the same time, because a gap like this shoots option premium through the roof. Now it has recovered, so we're kind of on the tail end of that opportunity. And you can see that in the near term, right, it was trading low 130s, so I'm not sure that's something that I really want to be getting into at this point with it trading at 157. Probably going to leave that one alone. Back here, let's see if we could scan and see anything interesting. I know we were asked about Uber in the Discord at the end of last week, and I was pretty busy last week, so I was not able to jump in. But again, yeah, not the best entry here. RSI isn't exactly giving us what we want. If we look at it on a 180-day basis, yeah, and to Div's point in the YouTube chat, Docu was looking a little bit bearish based on resistance. It was getting back up to where it initially gapped down from, which is what you would potentially expect to act as a first line of resistance. So definitely, he's saying it's bullish. We have a correction from Div in the chat. Well, I mean, if we pull up the DocuSign chart, it gapped down to right about this level. I mean, I think at least in the near term, with it, if we draw the line, right? I completely whiffed on the line. Holy goodness, let me remove that. and we zoom in right here, right? We see that it bounced off this level once, it bounced off this level twice, and now it's flirting with this, high 150s level again. So could it break through this and go back up and refill the gap? Absolutely. But I think it's such a big gap that in the near term, with RSI getting somewhat elevated on the 180 day, that it'll probably break down again, but continue to form a more steady base around that level. So no strong opinion from us right now on which way that one's going to go, but I think better to just stay away, because we know at least in the near term there's potential downside in this range to about 130, and I don't think there's anything from an option selling perspective, right? Yeah, you get 1% ROR at 152, so that's that's pretty far removed from that 130 of potential downside that we're seeing on the chart right there. So we're staying away from DocuSign as option sellers. But again, there's Palantir. We'll see it there on the scan. We already said that one was a decent idea for the upcoming week. Open Door. This is one that we'd like to play on a week-to-week basis. Let's pop this one back open and see, let's see what we can see. So there you go. We've several lines on here, and I think maybe some of these have been decently drawn because it's trading right in the middle of the channel of what we previously drew on here. But short-term 14ish looks like decent support. I like Open Door as a company. If we look at 14, what are we seeing here? We're seeing a 1.45% ROR. Maybe to be on the safer side of things. And this thing's been so volatile lately before chilling out on the back end of last week. I would almost want to wait for it to come back and test 14 again, or have some sort of, we see a big red candle here, obviously, but there's 1, 2, 3, 4, 5, 6, 7-ish large red candles that we've seen just over the last 180 days on the chart right here. So, maybe be patient and wait for a better entry opportunity on the 14 strike puts. If you're in love with Open Door at 14, nothing wrong with selling a 14 strike put, because at the end of the day, if the stock goes down, you're getting the stock for a discount. But if we zoom out to the, I think the 3-year might be a good one to illustrate this, as I completely whiff. This was a former SPAC, right? It was trading around this $10 level, went public, spiked up to almost 40 a share, jumped back up again, and is now coming back down. So I do worry a little bit about if it drops below this 1350-ish level, where it could potentially end up to the downside. And I think that downside is at about this $12 a share level. But, I don't know. Maybe want to potentially start with a smaller position and then average down to that 12 level if premium becomes available there. But, I'm really doing a really good job giving a convincing answer here. But with the 1.45% ROR at 14 and, potential break even at 1380, I think over a 5-day period, that 1380 potential break-even price, which would, it'd stick you right about here. That's, if I could draw the line, actually, that would stick you right about here. It scares me a bit, right? Because we see that it comes down to 13. But, what if this thing breaks back through 15? I don't know. This isn't one that I would put top of the list for Monday morning. I think this is one that, because it's started to potentially find some resistance here, if there's a big red candle that we see Monday morning and we could sell 13.5 or 13 and get premium on that, I think we jump on that. I think Open's going to be more of a wait and see approach as to one that we put on the top of the list for Monday morning. So before we get back to the scanner and keep trying to find some new ones for this upcoming week, I think we've got a few more entries. There we go. We've got J Gold 1235. J Gold. Nice spelling by myself again. I think you could just assume at this point, if I'm trying to spell someone's name, it's going to be incorrect. J Gold 1235. And then we've got JJP as entries number 23 and 24. J Gold 1235 and JJP, welcome to the HT giveaway and welcome to the stream. So going back to the list of options that we have on here, only a few more here. Let's jump into earnings after this, because again, not every week is going to be the best week in the world for option premium from like an HT wheel entry perspective. If you look at UVXY, which is one of those VIX ETFs, you'll see that it's gotten really, really depressed lately, meaning that option premium is being sucked out of the market. So, a lot of the typical stocks that we like to go to on a week-to-week basis aren't going to be as great from an entry perspective. So, maybe not a ton in here, but, there are, when there's not a lot of premium in the market for regular week-to-week trades, that's when we turn to things like earnings trades, because that's where there's always going to be premium in the market. So maybe looking at a few more of these before giving up. CLF is one we're pretty familiar with. That's a steel company. Got into the low 20s for a little bit of time and then fell back down. Let's look at the 180 day here. Let's get ourselves back up to speed, right? So it went from 15 up to 26. I was a little bit scared of it in this range, but now that it's come back to 20, the 20-ish level, not the worst thing in the world. I think if we draw a line at 19, actually, that's a really good looking base. We have 1 bounce, 2 bounce, 3 bounce, and 4, 5-ish bounces since July. So I'm really liking what I see at the 19 base. I will say I know what this is going to look like if we zoom out to the 3-year. That definitely scares me a little bit, but with inflation, with how the prices of commodities have been, with how supply chain's been looking lately, I don't hate the idea of potentially trying to scoop up some premium on the 19 strike puts. However, you'll go back to that option chain. You'll see that the 19 strike puts offer 0.61% ROR. Not going to be a huge fan of that one. So, crossing that one off the list. Not really seeing anything too crazy. Zillow's on here at 63, but there's definitely some downside below 63 on that one. So, one we definitely want to take it easy with. Moving further down the list here. Not seeing anything that's jumping off the page to me right now. So I think this is definitely a decent starting point to to get going with for Monday morning, right? We've got 2 safer HT wheel type trades. We've got 4 premium chasing trades, and I think that's not the worst thing to do for the last week of 2021. The one thing about earnings, which I'm just now realizing, I think if we go to the NASDAQ calendar, which very helpfully auto completes up there. The last week of the year, there aren't really going to be any earnings reports, which I probably should have thought about as I started saying this. But if you go to Monday on the earnings calendar, if it'll load for me. Come on. Yeah, nothing crazy, right? A lot of these are some smaller-ish companies. Tuesday, not a ton right here. Wednesday, no companies that we're really familiar with. Fuel cell, that's an interesting-ish one because that has typically historically carried a little bit of volatility. We could look at FCEL. But there you go. This thing's been down at the 3-year chart. If you thought the 3-year chart on CLF was scary, this one's, downright terrifying. This thing was hanging out at about $2 a share. They've got earnings coming up. Looks like you could get 1% ROR at 5, which objectively is a decent cushion. Falls right under an area of support, but here's the gap up right here. This candle back in November of 2020. This is what we're looking at. And if this gap gets filled to the downside, we don't start to touch some of these other candles until about 350-ish, right? Not a good place to be. So that's what I'm staying away from. Going back to the list of earnings for the upcoming week. Thursday. Kronos, I remember this being one of those weed stocks back when those were super, super popular a few years ago. Let's check in on it, see how it's doing. It's not doing great. But 426, as far as an entry is concerned, if we drew a line right here, 388 is the low on the 3-year, bounced off of level-ish. If you could get premium at 4, okay. Kind of interesting. I don't know enough about this one to be in love with the $4 basis, but especially when you have commission, it gets tougher on some of these cheaper options because, if you sell an option for $1, a half cent of commission is not going to, make you lose sleep on that. But if you're selling these things for 6-ish, 7-ish cents a piece, that takes a chunk out of the option that's not insignificant. So I do try to stay away from those that are, below 10-ish cents a piece. So I think that would kind of rule that one out for me. And apologies for the last few just being like, oh, we're looking at them, not for us. Looking at this, not for us. But that's kind of how this process goes, right? Not every single thing that pops up on here is going to be a good trade idea. And, if we want to have the sustained success that we've been seeing in the market, we can't just blindly jump at the first option that we have every single week as far as the scanner and premium is concerned, right? We've put together a really, really solid year so far if we look at that yearly tracker tab that we have on there. Haven't had a single month in the year so far where we've lost money. And this is the approach that we've taken to get there. So, obviously there's 645 of these on there. We're not going to bore you guys to tears by going through every single one of them. But this is the process we follow. And you could get this exact scan that we're using by going to our website, hourglass-trader.com, signing up for HT Premium, and then going to the options scanners tab. And you could spend your time going through some of these as well and come up with some of your own trade ideas. But that's the value of being in the community that we've got because, I've only got X amount of hours I could put into this, and I could try to find some. We found some decent ones. But during the week, you'll be alerted to different stocks, different options that potentially come up on a minute-to-minute, hour-to-hour basis as the week progresses. and you'll have your eyes open to some other things. So a lot of activity, I think, I anticipate during the week. It doesn't look like with the run that we had at the end of the week last week, a lot of option premiums has been sucked out of the options. So we're not looking too good from that perspective, but I do think we have a decent jumping off point, and we went through the exercise earlier where with these positions that we have in play right now, if the stocks stay completely flat, we're going to make about $1,300 for the upcoming week. So that's not a bad number to wrap up the year. And we don't have very many in play right now. We're only using 15% of our buying power. So if the market does pull back, we are in a very, very low risk position right now. We'll be happily to start selling some more options and making some more entries. But that's kind of all we've got, right? Not a lot of earnings for the upcoming week. Not a ton in the way of HT wheel trades that are popping up on the scanner. So this is definitely going to be one of those weeks where, there's only so much we could take into the week on a Sunday night. But one of those weeks where, on a day-to-day basis, I think we're still definitely going to have this list by next Friday, be as long as what we've seen in previous weeks where it takes up the whole page. But we're going to get there via trades we make intraday, Monday, Tuesday, Wednesday. So last thing I do want to talk about on the stream is this RCAT position, because it's one of our strategies that we like to call IV reversion, which is one that we haven't really had an entry opportunity on in a decent while. And this one kind of fit the criteria that we like to look for in an IV reversion trade. So ignoring this 3-year chart, 'cause that's a little bit terrifying, jumping in on something like the 1-year chart right here. There you go. So in an IV reversion type trade, there are a few things that we like to look for. One is we like to look for good news. And if you go to the live news, let's see. The shares are trading higher after the company announced it was awarded a multiple award blanket purchase by the United States Customs and Border Protection worth up to $90 million for 5 years. So boom, point number one, you've got good news. Point number two is you're going to want to spike from that good news. There is the spike from that good news. Point number three is that you're going to want an increase in implied volatility as a result of that spike. And if we pull up the implied volatility, there you go. You get your little spike in implied volatility. So there you go. We've hit 3 for 3. And number 4 is that you want to be able to identify a trading base that it shot up from and be able to sell options for decent premium near that trading base. So we could call the trading base roughly 190-ish, I think is a safe place to call the trading base. If we zoom back out to the 1-year chart and we drew a line at 190. That's how it stacks up. And if we extend this, come on, extend it to the left, you'll see that lines up with support back in December of last year. There was a bounce above this level back in September of this year. And again, we had the ultimate bounce back in, a week or so ago before the big spike. So 190 is something we can consider the trading base, a decent level of support. And then the next question was, could we get premium at around the 190 level? So for this one, it would be at a 2 strike. And the answer is absolutely, right? We like to target a 1% ROR on a weekly basis. This thing's about 4 weeks away from expiry, and it's offering 12.68% ROR, which is roughly in excess of 3% ROR per week, just provided it stays above 2. And now, could it go back down to 2, like down below 2, down to 178? Absolutely. But you don't need to just take into account your max profit point, which is 2, because it very well could run up back to 3. We never think about this one again, and we take our money and we run. But if it does run back down, we don't want to think just about that max profit point that we have at 2. We also want to think about our break-even price. And this is a little bit lower than when we called it out. We were able to sell these for, I think, 26 cents a piece. Yeah, there you go. We were able to sell from 26 cents a piece when we entered into them last week when the opportunity occurred. So we know that a $2 strike minus 26 cents of premium actually gives us a $1.74 break-even price, which is, roughly reflected by this red line right here. And if we zoom in on the, 20-day, that is a very, very nice cushion. Could it get back to this initial level of support? Absolutely. And quite honestly, realistically, I expect it to roughly get back down to this level. But if it settles back down to this level, we know that our break-even price is even further below that. Our break-even price is below the lowest this stock has even traded for in the last 1-year window that we were looking at. And the general idea behind this is that, hey, this thing was trading at 190. They had good news. So in theory, a stock that's at 190 and then has new good news should be worth more than 190. But again, even if it does pull back down to this 190 support level, we know that this option is going to be worth 10 cents at expiry. So come January expiry, there you go. It's going to be $320 a profit, even if it goes down to just 190. So we can have a huge decrease in the price and still make profit, just as long as it falls above that break even. And we're getting some questions. We're getting a statement here that our chart is not up from Steven in the YouTube chat. I would say this right here is the IV spike. I think it's still working. It's still working on my little phone that I use to monitor the stream. But this is the IV spike. You can see it right here, which coincides with the big spike in the stock. And then this is the chart for the stock. But again, this is where our break-even price settles. This is roughly where we expect support to be. But as long as it settles above this red line right here, we are making money. And if it settles above 2, we're making a very good amount of money with that 12.68% ROR. Now, we got 26 cents. You could still get above 20, which would put you in a similar situation where your break even would fall around here. So, still a little bit of a window of opportunity right there. And if this thing levels out at about 2 for another week or 220-ish, I think you're going to see some really, really decent decay in the price of this 2-strike put. So that is the idea with what we're going with right there. But, we've been going for about an hour and a half at this point, and we've got a decent list, I think, to enter into Monday morning with. This is one of those weeks where there's not a ton of opportunity because the market wasn't just completely hemorrhaging at the end of the week, which bodes well for put sellers. But I think we have a decent list headed into the upcoming week. Decent game plan. A lot of the game plan is going to be coming on a day-to-day basis in the market. And if you want to get those alerts for trades as we make them, get alerted to our entries, get alerted to our exits, and be part of the discussion as we develop our trade ideas as the day progresses, hourglass-trader.com. Sign up for HT Premium, and you'll be added to the premium channels of our Discord server where we have all of our discussion, and we alert all of our trade opportunities, right? There's the RCAT one that we alerted. And here's some of these other ones that we had in there. Plenty of examples of us entering, exiting trades, and then all of the spoils of victory, get posted to our winning trades channel. How about shout out Mark G? How'd he do this week? There you go, Mark G. $1,300 of profit. We have, $1,500 of profit right here. Some very, very successful traders, very, very smart traders, and that's I think that's the advantage of what's going on at our Discord server, right? We've got Will Stock coming in hot with $6,000 of profit. But, the advantage of being in a community like this is the fact that, hey, it's not just me. And, I think I do provide some decent value, not to toot the horn a little bit too much, but, I think I provide some decent value. However, there are several other super smart, super focused, super intelligent traders in here that are also sharing what they're doing. And that is the value of the community that we're in. As far as what we're doing, we're all in this together. Just because someone gets in a trade doesn't mean that you can't. There's plenty of room in these trades for all of us, and that is what we are doing on a week-to-week basis, and that is the value of the community that we've created and the HT Premium package. So, without further ado, we are going to head to the HT giveaway, and let me make sure that I've got everyone who has wanted to enter in here. JJP was the last HT message we got, I believe. There we go. Okay, let's see. We're getting reports of a frozen screen on the stream. Not good. Oh my gosh. Let me double check. Okay, I'm hoping it's been fixed right now. Let me know if it's been fixed. Okay, I think it is working a little bit better now. I'm checking the Twitch on my phone. I think it's working. But without further ado, let me zoom out a little bit further, and we are going to have the HT giveaway. And I just realized I don't think we've announced what the actual prize is. It's going to be the same prize as last week. It is going to be your very own HT branded Yeti tumbler. So I don't have the picture readily on me, but that is what you're going to win if you are the winner of the HT giveaway. We've got 24 different entries in here. We are going to run a random number generator to give us a number 1 through 24, and whatever number it lands on, that is going to be the winner. And again, if you are the winner, unfortunately, I can't directly reach out to people who are watching the stream. You're going to have to reach out to me, but you could do that through Discord. You could do it through Twitter. You could do it through YouTube, whatever method of communication to get to me. But if you do win the giveaway, it is on you to reach out to me and give me your information so we could get that pulled together. But without further